Beyond weather and supply, macro forces are now shaping the story for soft commodities. In 2025, global growth uncertainty, high interest rates, and persistent inflation have all weighed on demand, especially for cotton, coffee, and cocoa. For cotton in particular, analysts at StoneX note that the trajectory of global growth will decide the next move. When consumers spend less, textile production slows, and so does demand for raw fiber. The same story plays out across coffee and cocoa. When purchasing power dips, consumption of everyday luxuries like lattes and chocolate tends to flatten out, even when supplies are tight. At the same time, supply chain and trade finance pressures are adding new challenges. Soft commodities are increasingly caught in the web of de-risking supply chains and tighter working capital conditions in emerging markets. Financing constraints and prepayment risks are forcing many producers to rethink how they move their goods to market. And then there's regulation and sustainability. Soft commodities are now being treated as strategic assets, not just products, thanks to rising concerns over food security, ESG standards, and traceability. From deforestation rules to carbon reporting, policy is quickly becoming a market driver. The takeaway? Even when supply is tight, weak demand and new regulations can mute the upside or reshape the entire cost structure of these markets. Keeping an eye on growth data, consumption trends, and policy changes will be key. So watch this space over the next few weeks. Our analysts will be breaking down how 2025's macro and structural shifts are setting the stage for the year ahead, and what to watch as the global soft commodity landscape continues to evolve.